Hi, welcome back to Cheryl Trades. Leaps. Today we are talking about the break-even trap. Why you keep trading just to get back. Every trader says the same thing after a loss. I just need to get back to break-even. It sounds reasonable, responsible even. But this is one of the most dangerous mindsets in trading. Because the moment you start trading to get back, you're no longer trading the market. You're trading your emotions. And that's where the real losses begin. There's a shift that happens, and it's subtle. At first, you're trading based on a plan. You wait for setups. You manage risk. You stay patient. Then you take a hit, and suddenly, your goal changes. Not to execute well, not to follow your system, but to recover. And from that moment on, everything starts to break down. 1. The psychology shift. Let me explain what's really happening here. When you're in a loss, your brain doesn't process it as neutral. It treats it like a problem that needs to be fixed immediately. So instead of asking, "Is this a high-quality setup?" you start asking, "How fast can I make this back?" That one shift changes everything. You become more aggressive, less selective, more reactive, and without realizing it, you start forcing trades. 2. A real example. Let's walk through a simple example. You buy a call option on a strong stock, maybe something like Microsoft, expecting a breakout. Instead, the stock pulls back. You're down 30%. At this point, a disciplined trader would step back and reassess. But in the break-even mindset, something else happens. You think, "I just need one good trade to recover this," so you jump into another position, maybe a faster, riskier setup. This time it doesn't work either. Now you're down 50%, and now the pressure is even higher. So you take another trade, bigger size, less confirmation. And before you know it, what started as a manageable loss turns into something much worse. Not because the market was unpredictable, but because your objective changed. 3. Why break-even is a trap. Here's the truth most traders don't want to hear. The market does not care where you entered. It doesn't know your cost basis. It doesn't owe you a recovery. Break-even is not a real level. It's a psychological anchor. And when you anchor yourself to that number, you stop seeing the market clearly. You hold trades too long. You exit too early. You chase moves you should ignore. Because everything becomes about you, instead of what the market is actually doing. 4. Professional mindset shift. Professional traders think differently. They don't focus on getting back. They focus on executing well, one trade at a time. If they take a loss, they accept it. They reset. And they wait. Because they understand something most retail traders don't. Your next trade has nothing to do with your last one. There is no recovery trade. There are only good trades and bad trades. And the faster you detach from the need to recover, the faster your decision-making improves. 5. A practical framework. So how do you avoid the break-even trap? Here's a simple framework. First, define your risk before you enter the trade. Accept that loss up front. Second, after a loss, do nothing for a moment. No revenge trades. No immediate re-entry. Third, ask one question before your next trade. If I had no previous position, would I still take this setup? And if the answer is no, you skip it. This one filter alone can save you from a lot of unnecessary losses. So, to wrap it up, the goal in trading is not to get back to where you were. The goal is to become the kind of trader who doesn't need to. Because once you stop chasing break-even, you start making better decisions. And ironically, that's when the recovery actually happens. This is not financial advice. This is just simply a framework to help you think more clearly, manage risk, and approach the market with discipline. Subscribe if you want more content like this. I publish every week. Thank you, and see you in the next one.